Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, and the closing trades have become a bit flat because, of course, it's been a volatile trading session for us, but we have been toying just in a 50-point range, largely around that 19,750 mark, and as we speak, just inching closer to that 19,800 thereabouts at the index level. This is despite the global weakness that we have seen. For instance, if you look at the Asian markets, they are down anywhere between half to almost 2%. The European markets too have started a bit on the back foot, but the Indian markets at least holding on to minor gains. India VIX, that has seen quite a bit of spike today. So 4% higher, of course, nothing compared to what happened as far as the US CBOE VIX is concerned, which was up almost 20% on Friday. But nonetheless, 4% is a good enough move for the Indian markets. It's the broader markets which continue to outperform. So if you look at the advance decline ratio, it's favoring the advances, and a lot of stocks actually and sectors doing well in the trading session. Having said that, IT, which started out with decent amount of gains with the likes of LTI, Mindtree, HCL Tech, etc. doing okay, they have given up most of their gains, and the IT index is trading pretty much flat. It's also the metals names, especially the metal trading companies, the MMTC, STC of the world, which are buzzing. A lot of fertilizer stocks are in focus, FACT, RCF, and a lot of these other GSFC kind of stocks are doing cartwheels right now. So a lot of buzzers in the trading session, but let's see where we end the trading session, because for now, it's been a few jagged edges. But let's welcome on board the guests on the show. We have Kunal Bothra, Nooresh Merani, as well as Andrew Holland joining us on the show. Nooresh, let me begin by asking you, as far as the market is concerned, it hasn't done much today, just around the 19,750 mark, while the Bank Nifty continues to be a bit weak. What's the trading recommendation at the index level right now?
So as of now, we are still stuck on the band. We are basically in this band of 19,400 to 19,800, 850. And stock specific action is more rather than index. So we are still stuck. So the view is to hold on to the Nifty, wait for any dips closer to 19,600, 650 is where the risk reward comes in for a buy. So for now, it's a hold. On the upper end, if we can sustain 19,800, 850, the next target would be 20,200, 300. So the view is to ride on to the position, wait for dips to add a fresh position.
To add a fresh position, but at the start of the trading session, Kunal, we were discussing some of the FMCG names. Today, they're underperforming quite a bit. It's a very earnings-heavy week for FMCG majors. HUL, Nestle, etc. will be in focus. But from that vertical, is there any stock that you would want to buy, or do you just recommend to stay away from the entire space?
I think there are a few names, like Britannia is looking attractive. HUL is something which is looking attractive in terms of the risk-reward. Most of the other FMCG names like Nestle, etc., they are perched at a higher levels for themselves. So when you do a even a small comparison between the previous swing highs for the stock 4-5 months back in the month of June, July, as compared to the current market price, many of these FMCG majors, the likes of HUL, Britannia, etc., they are almost at a 10 to 15% discount, or at a lower level compared to the to many of the other peers. So that's one of the better ways to try and play these sectors, because they will give you those odd phases of correction and a time-wise consolidation. That generally becomes a good entry point for these names. Even the likes of, I think, Tata Consumers, I think that's also looking attractive above that 900 mark. And my sense is that the stock is migrating towards a higher support level. So maybe now 880 could be a good base for Tata Consumers, and keeping that as a stop loss, would look out for 980 to 1000 as a target.
Okay, Tata Consumers is something that you like, Britannia and the others as well. Andrew Holland is also with us on the show. Andrew, what's your take? Of course, this week we'll get numbers from HUL, Nestle, ITC. And it's a bit different, but nonetheless, if you go by what Avenue Supermarts has reported with respect to their retailing business, margins still seem to be under pressure.
Yeah, I think that's correct. But I think the market knows this, and it's been knowing it for some time. So I think you'll probably find that there'll probably be buyers at these levels for the stocks that you mentioned. I think the results season so far has been okay. I mean, there's been no... if you take IT, I think everyone expected the kind of results to where they are. So no big surprises there. And I think we're all just sitting on the fence now, waiting for HDFC Bank. And that could be the sentiment rider for banks in the next kind of few days. If they're good, then I think that sets it up for a strong, possibly strong rally for the banks. If they're showing the momentum that the market's probably not pricing it at the moment, but would be positively surprised if they were. I think overall on the market, though, it is holding up very well. I think all global markets are holding up very well, given the what's happening in around the Middle East and Israel and Gaza. So despite the higher oil price, the kind of worries about it escalating, markets are really kind of subdued, which is either good news that the markets got it right. Or we're going to be there's going to be some unexpected more negative escalation from this event. So, but at the moment the market's saying it's okay.
Hope it doesn't escalate from here on, but yes, you're right. We are getting a lot of those headlines, and not all of them are looking pretty at all. But Andrew, what's your take on metals? Of course, I mean they have these one-day moves, and today the likes of Nalco, Vedanta, they're all spiking. But would you take a bet in the metal names at all?
No, I think my overall view on the metals is to be underweight because my concerns around the global economy, despite the figures still coming out from a resilient US, is that demand is slowing, and that will impact metals. I think the only thing that metals could benefit from in the short term would be obviously the kind of stimulus that we're seeing, that China's continuing to kind of pick out at the edges. But if they were to do something more significant, that might just have that extra leg for metals in the short term. So I think it's probably a trading buy on that basis. But I think the demand scenario doesn't look good for metals overall.
Trading buy, it's only fair to ask that question to Nooresh as well. Nooresh, there are a lot of those metal stocks that you have been picking time and off again. But what about today? Which are the names that you would recommend as a buy from the metals pack?
So the preference has been mining names, and that is where things have done really well. So whether it's a NMDC, which has continued the fresh breakout of 150 towards 165 now. So the risk reward is not great, but mining as a space has been more interesting. But of late, we are trying to see some bit of a trend change in the aluminium names if it can sustain. So say a Nalco sustains 102, that would be a short-term breakout. So if somebody is preempting, maybe aluminium could be a space. Hindalco has been trying to test that same mark of 500 multiple times for the last 3-4 weeks. And that was the high of 2023 as well. So if it sustains above 500, Hindalco could be the one. So would be looking at Hindalco and Nalco, continue to like NMDC, which could go up a little more higher towards 175, 180 levels. But rest of the names are still on radar, but only aluminium has started popping up.
Aluminium names is what you like. Let's discuss some of the stocks and news. And I want to throw the first one to you actually, Kunal. Federal Bank, the numbers were out. The net interest income has jumped up by almost 7% quarter on quarter. The operating profit at 1,324 crore was better than expectation, and ditto can be said for profitability as well, which stood at around 954 crores. You also had Karur Vysya Bank coming out with earnings. They were largely in line with expectations, but seems like that the stock has seen a bit of a perk up when it comes to Karur Vysya Bank. That stock was high by almost 3%. Either of the names that you like, or do you have better bets from the mid-tier banking names?
I think Federal Bank is something which is actually attractive because even after the stock ebbing off from the day's high, 153 approximately was the day's high for Federal Bank, and the stock has now cooled off to 148 approximately. I think it's actually a very good level to try and chip into the stock price because typically we've seen that Federal Bank, when it doesn't react too negatively on the post results, we expect the stock to get into a very quicker recovery as compared to times when the stock goes into a 5% kind of an average correction. And then it takes a lot of time for the stock to get into a completion of that corrective phase and then a resumption of the rally. But this time around, I hope that the stock may not take too much of a time in terms of going into a downtrend, but the recovery from here on could be pretty much quick. So out of the two names which you mentioned, Federal Bank is something which I would initiate a buy even at current levels of 148 approximately.
Okay.
So not to be okay day actually. You can't take anything special about the market setup. Nelco EBITDA at 14 crore versus 14.9 crore. Look at a stock like Nelco. It's owned actually by Tatas, and in last 2 or 3 years, a double-digit stock had almost become a 4-digit stock. TTML, it's not that everything from the Tata group is something you can predict, where you can predict numbers. But 2020, 178, then went on to become almost 1,030, 1,040, came cracking down. And look at the EBITDA. The EBITDA is 14 crore for a market cap of that kind of size. Can it really be justified? The other one is TTML, Tata Teleservices Maharashtra. It was 2-digit, went soaring up to 400 rupees. Again, if you look at from the COVID period, I mean, who would have thought that a company which does not have a visible operating business, where was it in COVID low? No, this 2020. Let's go to 2020, please. I think it must be like some 15-20 rupees. And then it went all the way to about 300 rupees. And from there, it's just been, a heck of a joyride, so to speak. Andrew, the street is divided on IT. There are some who say that, okay, the worst is behind IT. Whatever could go wrong has gone wrong. They have a 6-month problem. Next year, it's going to be back to sunny days. Do you think we can take a futuristic view that sunny days are back and the darkest dawn before the dusk is over?
I'm not sure where sunny days came from in the country, to be honest, but it's. I still think there's. I mean, if I'm in a tunnel, then I'm still looking for for a bit of daylight to see if it's going to be cloudy or sunny. But I actually think that there's still some problems for the IT companies in the next quarter. So I still think I wouldn't be rushing here. It's a bit of a safe haven at the moment, given the political events that we're seeing globally. But I think there's better growth areas, which we talked about before, where you can make more money in the kind of the medium term, whilst you're waiting for this so-called sunny days to appear. I'm not hearing it from the company's commentary. Yes, they are getting some wins, but you can bottom fish if you like, but I don't think you're going to make so much money from it.
Sunny days or cloudy, rainy days, we don't know, but it looks like it's definitely something on the pitch which has been right. And we saw, of course, India winning against Pakistan. Andrew, I know that you're a big watcher when it comes to tennis and football. Not sure if you track cricket that closely. And if yes, it was quite a bit of topple with Afghanistan upsetting England.
Yes, well, fortunately, cricket's not one of my biggest sports, so I'm not so upset about England losing so badly to Afghanistan, which I should be if I was really an avid cricket fan. So I didn't have expectations anyway coming into the tournament, and I still don't have any high expectations. So I'm more concerned at the moment on the HDFC Bank results than I am on England playing South Africa on Saturday.
Concerned about HDFC Bank, so let us try and address that and go across to my colleague Harsh, who's joining us to talk to us about what the street is expecting. But at least for all those cricket watchers, there's going to be more cricket. If you are complaining that there's too much cricket already, Nikunj, we of course heard the news that it's official now. Cricket will be part of Olympics from 2028.
Still 5 years away.
Still a long time away, but it's just a good feeling. I know we all keep on complaining that there's too much cricket these days with the amount of IPL matches and all of that. But it's definitely interesting, and I'm sure, like, as Indians, we just love cricket, right? So it doesn't matter if it gets added more into more cities, more championships, more games coming in.
In fact, I think ICC and BCC are of the view that there should be less cricket now. With so much of cricket, bilateral ties, IPL. Just think about it. I mean, post IPL, we had an Asia Cup.
Yeah.
We had India had gone on overseas tour. They came back. Then the match with Australia. There's just too much of cricket right now. What is that leading to injuries? What is that leading to concentration? What is that leading to? I mean, there is something called a fatigue factor which kicks in.
Yeah.
There was a time when you had to watch cricket because that was the only alternate available because you had a linear television model powered by Doordarshan. That's not the case now. I mean, there is phone, there is OTT, there are a lot of other ways in which you, in a sense, want to do it. So the craze around ICC, I think, is always going to be there. But all these smaller events, I mean, look at Asian sports. The craze around Olympics was so high. Asian sports have just come and gone, and we've spoken about it, but we've not really tracked it that aggressively. So too much of everything is bad.
Too much of everything is bad, and I think we got a bit of a feeler with the kind of occupancy levels that we had seen in stadium. At least for the starting matches, it wasn't that impressive. But nonetheless, let's see where it goes from here on. But since Andrew is more concerned about HDFC Bank, let's put the spotlight back again on that. Harsh, tell us what the street is expecting.
Right, HDFC Bank will kick off earnings for the banking pack Q2 FY24. It's going to be a unique one because HDFC Bank is now a merged entity, HDFC Limited plus HDFC Bank, both loan books combined, and therefore the numbers will appear combined, and the percentages therefore may not be comparable versus last year or last quarter. So let me start off first with that net interest income number expected around the 28,500 odd crore mark. That's where it's expected where operating profit is concerned, around 23,000 crores. So you're expecting quite an elevated OPEX this time around as well from HDFC Bank as they continue to invest in branches. Let's talk about provisions expected around 3,100 crore. Now, mind you, provisions last quarter were around that 2,850 odd crore mark. So you add up the HDFC limited provisions and roughly you're arriving at a 3,200 crore number. That's where we are getting the number from, and profit after tax is around the 15,000 crore mark is the expectation. 14,800 is the number as per our poll. Of course, the most important piece of the numbers will be how net interest margins are evolving. NIMs are expected to retreat a fair bit. In fact, the overall NIM, which was at 4.1% in Q1, is expected to be around the 3.7% number. That's the guidance. Of course, need to wait and watch out how it actually plays out. The other piece or the monitorables will be with regard to how ROAs are going to move and how quickly can they move to that 2% number, and whether that loan growth of 6%, 5% odd sequentially is really sustainable. Of course, deposit growth also very solid from HDFC Bank. Whether those numbers are sustainable or not is going to be the key with regard to where management commentary is concerned.
Andrew, should one just keep life simple, buy Bajaj Finance and HDFC Bank? You pretty much will get the best of the both NBFC and bank and just forget about it and just enjoy World Cup.
Well, I think some people would complain on HDFC Bank in particular that the share price has done nothing for a number of years now, so a lot of opportunity cost missed there. But yeah, maybe over the results will be out today, so we'll be able to find out what we need to do. Maybe we can enjoy the cricket even more if the commentary is good about the environment going forward, and particularly on NIM. So that's what I'm waiting for, Nikunj.
Andrew, while everyone is excited about industrials, capital goods, to some extent even companies which will benefit from late capex now, but nobody is so excited about buying metals, cement. Why is that? If we are looking at new buildings, more real estate, more commercial activity, then steel, cement, everything would be consumed.
On the metals, on steel, as I mentioned before, I think we're a global taker of prices, right? Because we're not that big in terms of setting prices globally. So we're really dependent on global demand, global factors, China in particular. So in the short term, it's probably possibly a trading buy for the fact that China could do some big stimulus, which will excite all the kind of investors towards metals in the very short term. But if you think the demand scenario as we move towards the slowdown globally, it's going to affect metal prices. So that's why I'm not so keen. As regards cement, you have a few new players coming in, which obviously going to make it more competitive. And you can probably see from the results over the weekend that it's been really freight costs which helped that company rather than it was margin expansion. So there's pricing pressure, there's new competitive pressure, and that means that growth will be as strong, despite what you've just said about new buildings, new roads, new everything.
Kunal, some of these names from the Fertilizer Pact, FACT up 20%, GSFC up 11%, RCF, GNFC, of course the volumes for some of them are limited, but nonetheless, any picks?
I think it's a very strong move, Nisha, for many of these fertilizer names. GSFC is something which we discussed in the morning. The stock was almost at 200 odd levels, made a high of 214. Now it's somewhere close to 208 mark. It's a very good comeback for the stock when we look at this from the 140 lows. The stock was, I think, 3-4 months back adjusted towards dividend for GSFC. And I think it's again a very strong indicator that a major trend for the stock is on the upside. So there are bound to be those phases of volatility and sharp corrections into stocks like GSFC because of their high beta nature. But that generally indicates a buying opportunity for the stock. Deepak Fertilizer also, I think, on the other hand, that's also looking very, very attractive. Now I think it's at 680, 685, the last I'd seen for Deepak Fertilizer, completing a major bullish pennant formation on the daily charts, have already crossed about the 200 DMA, I think just about a couple of weeks back. So it looks very attractive as a setup.
It's not a very powerful day for sure. So Kunal, what are we looking at? Gradually, slowly, do you think this market is headed higher? Do you think the path of least resistance is on the up now?
Yes, Nikunj, the path of least resistance is on the upside. It's just that the lack of stocks, large cap names, is probably not adding to the strong push across the positioning in terms of the open interest. Now, just to give you a start, I think over the last 7 days, there has been a reduction of open interest for the likes of HDFC Bank, Reliance Industries, ICICI Bank, etc. So that generally indicates that the participation levels are dropping down, and the stocks are also not showing any kind of a major trend or any volatility, whether it's a breakout on the upside. It's just 0.5% of a confined move for these large cap names, and that's adding to that patience testing for the markets. But net, we typically see that don't short a dull market. I think we are into that phase of a dull market for the benchmark indices, but there is a huge amount of action still there in the mid caps and small caps.
There are a lot of stocks where you're going to ask yourself why. Vakrangi up 20%, MMTC up 10%, STC has gone through the roof. There is upside momentum which is clearly there in HCC. ITI, again a government company. And Kunal, I use this phrase, I'll use it again. Has the tail started wagging the dog?
Yeah, because I think for most of the stocks which you've mentioned, I would probably believe so. So I think it's very, very important to be cautious over here into these kind of stocks. I would definitely not venture into these names, nor even advise buying into these stocks, because they may look very attractive. Now, just to give an example, I think GVK Power was something which, even on the afternoon show, there was a query. The stock moved up, I think, some 200% in a matter of the last 3 or 4 months. Came back towards 9.8 or 10 approximately. Now the stock has been into the down circuit since the last 1 month. So, it may look very attractive when these stocks are moving up higher, but when these stocks are going to a sharp correction, we've seen historically that the corrections could be very, very sharp and swift into these names. So I would definitely look to avoid these names.
Okay, look to avoid some of these small cap names. But Andrew, before we let you go, a quick question. The FII flows, they have been not very supportive at all this year. What do you think is holding the FII money back? Is it just the dollar strength and the attractiveness back home?
I mean, that's part of the reason, but I think obviously with the the higher for longer interest rates, and coupled with the stronger dollar and the volatility you're seeing in terms of geopolitical events, you take risk off the table, and emerging markets is always one of the first, and India's been a great performer, so you tend to get more money coming off you've got better performing markets in the very short term. So I think it's more to do with that. Obviously, not helped by an oil price, which I know is lower, but went as high as 97 recently in terms of Brent. And I think those kind of things just take the shine off the India story in the very short term.
Okay, point taken. On that note, Andrew, we'll let you go. Thank you so much for making time and speaking with ET now. But time now to take the closing trades from our chartists as well, then their closing ideas. Nooresh, what's the closing trade?
So that would be a buy on Indraprasth Gas Limited, IGL. The stock is contracted for the last few months. Today, the stock is trying to make a breakout move above the recent highs. So expecting this to cross into a new 52-week high going forward. Okay,
so IGL is the stock. What about you, Kunal?
I'll go with Hero MotoCorp as a buy. Very good breakout for the stock, about 3,100 levels, and still perched, I think, closer to the high point of the day. So very good activity on the F&O side. Would look to buy the stock.
Okay. So